Hello friends. Friends, we'll continue our discussion on dissolution of partnership firm. Right? Now in dissolution, I told you that we are going to discuss majorly four things. One is realization account. Right? Second is loan account. That is partner's loan. Third is partner's capital account. And the fourth one is bank or cash account. Clear? Is it clear? Now what we have discussed so far is we have discussed the realization account in detail. We have discussed loan account in the last lecture. This was simply that partner's loan is to be paid. So the entry will be partner's loan account to cash or bank account. Clear? Now in the today's lecture we are going to discuss about partner's capital accounts. Right? We are going to discuss about partner's capital accounts. Now, we have done realization account, right? There also we talked about the partner's capital account. So, we will first discuss the journal entries. We will discuss about the entries that we will take to partner's capital accounts. First, talking of realization. In realization, what we talked about the partner's capital account. One was when the asset is taken over by partner, isn't it? This was one case where we talked about partners' capital accounts. What was the entry? Entry was partners' capital account debit to realization account. Am I right? So this was one entry, asset taken over by partner. Then we said liability taken over by partner. Liability taken over by partner. Then what is the journal entry? The journal entry is realization account debit to concerned partners capital account. Clear? These two entries we have discussed while discussing realization of assets and settlement of liabilities. Clear? So these entries we will take to partners capital accounts. Asset taken over by partner, that will be debited to partner capital account, and if the liability is taken over by partner, it will be credited to partners capital accounts. Then we discussed about workmen compensation fund. Right? Workmen compensation fund. Right? There were various cases. Taking a very simple case that there is no liability against the workmen compensation fund, we said this whole workmen compensation fund will be transferred to partners capital accounts. We do not transfer it to realization account, but we transfer it to partners capital accounts in profit sharing ratio. Clear? In profit sharing ratio, we will transfer the whole of fund to partners capital accounts. From this, we can also say if there are any reserves, all the reserves will be transferred to partners capital accounts. Right? Am I right? If workman compensation fund we are transferring to partners capital account, that means other reserves also, if there are any reserves appearing in the balance sheet on the date of dissolution, we have to transfer those reserves to partners capital accounts in their profit sharing ratio. These reserves includes accumulated profits. What if there are accumulated losses appearing in the balance sheet? The entry will be reversed. For accumulated losses appearing, if there are accumulated losses appearing in the balance sheet, what will be the journal entry? Journal entry will be partners capital account debit to profit and loss account. Clear this much? This is what we have already discussed. We discussed about the assets taken over by partners. I said partners capital account will be debited. The partner who is taking over the asset, that partner's capital account will be debited and realization account will be credited. Why realization and not asset account? Because asset has already been credited when we transfer the asset to realization account. So here we will credit realization account. Similarly, if there is liability taken over by partner, we will credit the partner's capital account and debit realization account. Clear? This is, I'm telling you, the entries which we will take in the partner's capital accounts. We are not preparing, we are just identifying the entries which are to be taken in partner's capital account. Then we talked about workman compensation fund. There I told you that if there is no liability against the workman compensation fund, then the whole fund will be transferred to partner's capital account. If there is some liability which is less than the fund, then the remaining fund will be transferred to partners' capital accounts. Clear? So, from this, I can say if the workman compensation fund is being transferred, I can say that all the reserves appearing in the balance sheet on the date of dissolution will be transferred to partners' capital accounts. Make a note of this here. All reserves and accumulated profits and losses will be transferred to partners' capital accounts in their profit sharing ratio. Clear? So, what we say, all the reserves and accumulated profits and losses appearing on the date of dissolution, that all these reserves will be transferred to partners' capital accounts in their profit sharing ratio. This is what I have done in this entry and this entry. Is this much clear, friends? Shall we move forward? Right? What else? Then I talked about, under the realization only, I talked about expenses. There also, there were 3 cases in which we have to take the partners' capital accounts. Number 1. Let's see. Number 1 is expenses paid by partner, right, on behalf of firm. The expenses were to be borne by the firm, but these expenses have been paid by the partner. Now, this firm will compensate the partner for the expenses that has been paid by the partner. For that, what is the journal entry? Realization account debit to partners capital accounts, isn't it? This is what we discussed. Why we are crediting the partner's capital account? Because we have to compensate the partner for the expenses he has incurred, because the paying expenses was the responsibility of the firm. But who is paying? Partner is paying. So the firm will compensate partner for those expenses. Clear? Then what was the second case? Remuneration to be paid to partner. Right? Remuneration to partner for carrying out the dissolution. If we are paying the remuneration to partner for carrying out the dissolution, again the partner's capital account will be credited and realization account will be debited. Account debit to partners capital account. Clear? What was the third case? Third case is expenses paid by firm on behalf of partner. If you remember there, the third case, what we said? We said that we pay a fixed remuneration to partner, and it is the responsibility of the partner to pay the expenses after that. We will pay just the fixed remuneration, and whatever the expenses are that are not relevant for the firm. Expenses might be more than remuneration, that is partner's headache. Expenses might be less than remuneration, that is a gain for partner. Clear? So in this case, when we say expenses are paid by firm on behalf of partner, here the responsibility of paying expenses was on the partner, but who is paying? Firm is paying. So who will compensate whom? Partner will compensate firm, isn't it? Partner will compensate firm. So in this case, we will debit the partner's capital account, because for the partners, any adjustment, whether we have to take the money or whether we have to give the money, we will do all the adjustment through partners' capital accounts. Clear? We have paid, so we will credit the cash or bank account. Clear? So these are the entries that we will consider while preparing the partners' capital accounts. These related to expenses. Right? There was one more entry which will be covered in capital accounts, that was expenses to be borne by partner X but paid by Y. Right? That means the responsibility of paying the expenses was on partner X, but who paid the expenses? Partner Y. Who will compensate whom? X will compensate Y, because the responsibility of paying expenses was not of Y, but still he paid the expenses. So what will be the journal entry? X capital account debit to Y's capital account. Clear, friends? So these are the journal entries related to expenses. So what we have discussed so far: first I said asset taken over by partner, then liability is taken over by partner, then I told you that all the reserves and the accumulated profits and losses will be transferred to partners' capital accounts in their profit sharing ratio. Then after that we discussed about expenses. Expenses, these four cases where we have the reference of partners' capital accounts. Anything else? What was the next step? If you remember the steps of realization account, what was the next step? Next step was closing realization account. What we do on closure of realization account? This we did in the last lecture. Clear? So now you tell me what we did in the closing realization account. How we close the realization account. When we close the realization account, there is either profit or loss. Isn't it? There is either profit on realization if the credit side is more than the debit side, or we have loss on realization. What is the treatment of this profit or loss on realization? We transfer this profit or loss to partners' capital accounts. What is the journal entry? For profit, what is the journal entry for profit? It is realization account debit to partners' capital accounts. Right? Right? In their profit sharing ratio, we distributed the profits, and in case of loss, we will have reverse entry. The partners' capital accounts will be debited and realization account will be credited. Clear, friends? To realization account. This much is clear. So these are the journal entries relating to realization account when we talk of partners capital account. So when we prepare partners capital account, we will transfer this entry. If any asset is taken over by partner, we will transfer this entry. If any liability is taken over by partner, if there are any reserves appearing in the balance sheet, we will transfer all the reserves to the partners capital accounts. Regarding expenses, if we have any case, then we will treat partners capital accounts accordingly. Clear? Then on closing the realization account, we know there will be either a profit or a loss. If credit side is more than the debit side, we have a profit, and if debit side is more than credit side, we have a loss. This profit or the loss will be transferred to the partners capital accounts. Clear, friends? This much is clear. Now, what else is to be done in partners capital accounts? One important point here is transfer of partners current account to capital accounts in case of dissolution. Right? Now, if you remember in the very first chapter, what we did was, there are two types of capitals, fixed capital and the other one is not a fixed capital. Right? In case of fixed capital, if you remember, what we did was two accounts were to be prepared. In case of fixed capital account, there were two accounts to be prepared. These were partners capital account. This was the fixed account. We do not do any transaction in the partners capital account. All the transactions were done in partners current account. This is the very basic of partnership that we did in the first chapter, isn't it? We did all the transactions. We did all the transactions in partners current accounts, right? We did all the transactions here. Then this partners capital account was fixed. We cannot change this partners capital accounts until and unless there was fresh capital introduced or the capital was withdrawn. No other transaction was done in partners capital accounts. Now, in case of dissolution, what you have to do is, you prepare the partner's current account, you get the balance in the partner's current account. The balance can be on this side. We can say to balance carried down. Right? What is this case? If it is a credit balance, that means credit side is more than the debit side, then we say to balance carried down, or we say by balance carried down. If debit side is more than the credit side, we have a debit balance, right? That is balance carried down. Now this credit balance, if we talk of balance sheet, this will appear on the liability side because it is a credit balance, and this will be appearing on the asset side, right? This is what we call as debit balance. This is credit balance. So if we have a credit balance, we'll say to balance carried down. If we have a debit balance, we'll say by balance carried down. Now if you have to transfer this current account to this partner's capital accounts, how will you transfer? You will take this balance to the partner's capital accounts. You will say by partner's current account. If it is a credit balance, you will transfer this balance to the credit side of the partner's capital accounts, and if it is a debit balance, you will transfer it to the debit side to partner's current account. Clear, friends? So you have to transfer the partner's current accounts to the partner's capital accounts, right? So what will be the journal entry for this? You can pass a journal entry. What will be the journal entry? Journal entry will be, in case it is a credit balance, journal entry will be partner's current account debit to partner's capital accounts. You have to just cross the entries. Remember this. Credit balance, cross the entry, take it to the credit side. What will be the journal entry? Partner's current account debit to partner's capital account. The reverse entry will be partner's capital account debit to partner's current account if it is a debit balance. Clear? I hope this much is clear, friends. This was one important point while we deal with partner's capital accounts. We have to transfer current accounts. If it is a debit balance, it will be showing on the asset side. It will be transferred to the debit side of partner's capital account. And if it is a credit balance, it will be shown on the liability side of the balance sheet. It will be appearing on the liability side, and this we will transfer to credit side of capital accounts. Clear? So this is all what we are going to deal in partners capital accounts. These are all the entries that I have covered. Almost all the entries. One or two might be have left, but that we will cover while doing the practical questions. I think I have covered everything, right? So now the question is how to close the partner's capital account. That is one major question. How to close the partner's capital account. Question is closing partner's capital accounts. How we are going to do this? We are preparing, because we cannot carry forward the balance now. Because we are closing the business, there will be no balance sheet. We can't carry forward. We can't say we will say balance carried down. No. This is by balance brought down, right? After that, you do all the adjustments this side, right? Now in normal cases, if the credit side is more than debit side, what you write is to balance carried down. This is what you do in normal cases, but here we won't do this. What we are going to say is, if credit side is more than the debit side, we will say to bank. That means it is the payment to be made to partner. This balance reflects the payment. This reflects the payment to be made to a partner. Clear? So we will say, we will write it as to bank account. Clear? Then in normal cases, if the debit side is more than the credit side, what we do? We write it as by balance carried down. But in case of dissolution, we will not write by balance carried down. We will say by bank account. What does this mean? If this means payment to be made to partner, this means payment amount to be brought in by a partner. Clear? So this is how we are going to close the partner's capital accounts, right? Through bank. If credit side is more than the debit side, that means we have to make payment to the partner, and if debit side is more than the credit side, that means amount is to be brought in by the partner. Clear, friends? So this is how we are going to close the partner's capital accounts. I hope this much is clear. Clear? Now, so we have discussed this partner's capital account also. We have discussed this, we have discussed this. Now what is left is bank or cash account. You can simply prepare the bank or cash account. What is to be recorded in bank or cash account? If we talk of bank or cash account, what are the journal entries? Let's discuss about this. Like we have discussed the partner's capital account, let's discuss about the cash or bank. In case of realization, what were the journal entries related to cash or bank? One was assets realized in cash, right? In this case, what is the entry? Cash account debit or bank account debit to realization account. This entry will be taken to cash or bank account, right? Then talking of liabilities paid in cash. See, there are majorly two things. Either the asset will be realized in cash or it will be taken by a partner. If it is taken by a partner, it will be taken to partner's capital account. If it is realized in cash, it will be taken to cash account. Similar entries, we are working on the similar range we are working on, right? Liabilities paid in cash, what is the journal entry? Realization account debit to cash or bank account, isn't it? Clear? Now, any reserves? In case of reserves, there is no mention of cash or bank. Then we will move on to expenses. Here there are two cases again. What are the two cases? One is when expenses are paid by firm. Expenses are paid by firm. What is the journal entry? Simply we say realization account debit to cash or bank account, isn't it? This we have discussed already. The second case is when expenses are paid by firm on behalf of partner. That is, the responsibility was on partner, but the expenses have been paid by firm. Now the partner will compensate the firm. This is the same entry that we have discussed earlier in partner's capital account. So what is the journal entry? Partner's capital account debit to cash or bank account, right? Then what we discussed? Closing of realization account, no cash bank, right? Then capital account, partner's loan account. Yes, when we are paying the partner's loan account, there also we say partner's loan account debit to cash or bank account. First we have paid the outsider liabilities, then partner's loan account, then we will talk about partner's capital account. Section 48, partners capital accounts. We are closing the partners capital account through cash or bank account. Clear? So this entry will be taken. It will be either, this entry will be either partners capital account debit to bank account, right? Clear? Friends, this I have done it, sorry. This is the reverse thing, sorry. This is payment to partner, yes, right. This is payment to partner, or the entry will be bank to partners capital account, bank account debit to partners capital account. Clear, friends? Clear? So after all these entries, nothing will be left in bank and cash. After all the above entries, nothing will be left in bank or cash account, right? Clear? So this is very simple to prepare cash or bank account. We have done it in order. First we discussed about realization. There we discussed about realizing assets, paying liabilities. Then we discussed about the funds, workman compensation fund. Then I said all the reserves will be transferred to partners capital. Then we discussed the various cases of realization expenses. Then we discussed about partners loan and then partners capital. After all the above entries, nothing will be left in bank or cash account. Make one important note here. If both cash and bank are appearing in the balance sheet, if both cash and bank are appearing in the balance sheet, then you will prepare only one account, that is either bank account. If you prepare bank account, then transfer cash to bank account, right? Or prepare cash account. In this case, transfer bank to cash. You all know how to transfer this. You all know the journal entry for this. Cash to bank, bank to cash. Right? So if both the cash and bank accounts balances are appearing in the balance sheet, it is advisable to prepare only one account. Either prepare the bank account or either prepare the cash account. Transfer the other account balance to the account you are preparing. If you are preparing the bank account, transfer the cash account to bank account. Entry will be bank to cash. If you are preparing the cash account, then transfer the bank balance to cash account. The journal entry will be cash account debit to bank account. Clear? I hope this much is clear. So now if you see, we have discussed all the four things, isn't it? We have discussed realization, we have discussed loan account, we discussed partners capital, we have discussed bank and cash account. With this, our chapter is almost over. Now what we have to do is, we have one or two small topics related to this only which are left, and we will do some practical problems. right? So it's a very easy one. I hope this you will find find this chapter very easy. I've tried to explain each and every concept, right? So friends, if you have any queries, just send me an email at ksjteaching@gmail.com, right? In the next lecture, what we are going to do is some practical problems, right? We have covered all the major aspects of this chapter, that is realization account, loan account, bank account, and partners capital accounts. We have discussed the major accounting treatment in case of dissolution. Now in the next in the next class, in the next lecture, we'll do some practical problems on this, right? So that's all for this lecture, friends. Thank you so much.